Okay, now we have analyzed the transactions, we have journalized them in a journal, we've posted them to the ledger, we summarized them on a trial balance, on a worksheet, we did the adjusting entries, got an adjusted and posted them, got an adjusted trial balance, and then we did the financial statements. And now we are finally completed with the month and we can close out this month. Now there are 4 steps to closing. We can close revenues to income. This income summary is just a temporary 5-minute account. That's all it's going to last. Okay? So it's called income summary. We're going to close the revenues into that temporary account. We're going to close the expenses into that temporary account. Then we're going to close the temporary account itself, the income summary. We're going to close that into capital. And we're going to close the owner withdrawals into capital. By the time we get done, all the revenue accounts should be 0 and ready to go for the next month. All the expense accounts should be 0 and ready to go for the next month. And the capital account should equal your ending capital that was on your statement of owner's equity and on your balance sheet. If they're not, then you might have done your closing steps wrong. Now, this whole closing process becomes less of a problem as we go in the future because of the fact that the software takes care of this for you. So if you're just closing from one month to the next, it's very, very simple. You click a button, it's no problem. For closing out the end of the fiscal year is a little more complex, and you have to absolutely 100% sure that you have checked every single account and it's correct, because once you close out the fiscal year, you cannot go back in there and make changes. You're done. Okay, so it is more of a complex problem, and depending on how big the company is, might take all night or whatever for that process to happen. However, the software is doing it all for you, and so unless you are manually doing accounting for a really small company, you generally no longer have to worry about these closing steps. But it is still good to know what is happening in that computer behind the screen. Okay, and this is basically what it's doing. It's closing all the what we call temporary accounts with your revenues and expenses, and drawing are all temporary accounts, and they're closing all of those into capital. Okay, so let's take a look with minion mowing. Okay, our first step is to close the revenues to income summary. So here again is a partial worksheet that just includes the last 6 columns: adjusted trial balance, income statement, and balance sheet. Now the revenues and expenses are all on the income statement, so we're going to close those out. And then the drawing account we're going to close out, which is on the balance sheet column here. That's all that's going to be closed. Okay, we're not closing cash, accounts receivable, all those assets and liabilities, and you never close the capital account itself. So always be careful as you're doing journal entries. So let's start with the first one, closing revenues to income summary. So here, this 1480 credit balance is our revenue. So if we want to close that account out to 0, we're going to need to do the opposite of credit. We're going to have to debit 1480 in the mowing fees earned. Then once we post that to the ledger, mowing fees earned should equal 0. So I'm going to need to debit the revenue account. Okay, and so we're going to go to our journal. It was our regular transactions. There was our adjustments. Okay, so now we're doing the closing entries. They're also just like adjustments. They're on the last day of the month. And we said we're going to debit mowing fees earned for the $14.80. Once I post this, mowing fees earned will be 0. Now, my debits have to equal my credits, so what am I going to credit? This is where that temporary, that super temporary account income summary comes in. And we'll credit it $14.80. And our explanation, close revenues to income summary. Okay, we go next. Our second step is to close expenses to income summary. So here's all our expenses. We have 4 expenses in this case. Of course, expense balances are all debit and ours are all debit. Okay, so that's good. So what are we going to do to close them? We have to do the opposite of what they already are. They're all debit balances, so I'm going to need to credit all of these expenses, okay, to be able to zero them out. So I have rent, telephone, supplies, and depreciation expense. Now I'm going to have to credit them. Credits are listed second, okay. So what are we going to be debiting? Well, income summary. Telephone expense, supplies expense, depreciation expense. Okay, so we have all our expenses listed, and we need to put their amount, so 280, 90, and 10 all need to be credited. Okay, so I want my debits to equal my credits. So how much am I going to debit to income summary? I add up all my credits, they equal 380. Okay, which is my total expenses. We put our explanation, close expenses to income summary. Okay. So now we've done the first 2 steps. The next step is to close income summary to capital. Okay. So, income summary oftentimes is not in the general ledger. It's not on our worksheet. Okay, sometimes with a periodic inventory system, which we'll talk about at the end of the semester, it can be on there, but for most companies' worksheet, it's not. Income summary is not anywhere. So how do I know how much the number is? Well, it helps you if you do a little T account. Let me see. Yeah. Okay, so I'm going to draw a little T account here. This is income summary. Okay, now what have we put into our T account? Well, we have income summary up here. It's credited for $14.80. Okay, and we have income summary debited in the second closing entry for $3.80. Okay, so now we want to close out income summary. So we have to know, well, what is the balance of income summary, and is it a debit or a credit? Okay, so we have to find the balance, and just like we know with T accounts, your big number minus your small number, put it on the side of the big number. So we have $14.80 credit minus $3.80 debit is $1,100 that we're going to put on the side of the big number. 1480 is bigger than 380. Okay, so we have a 1,100 credit balance for income summary. So what are we going to do to close it? If we have an 1,100 credit balance, we're going to need to debit it to close it out. Now, if my expenses were more than my revenues, my expenses, the big number, would be on the debit side. My balance would be on the debit side. That means I would have to credit income summary to close it. So this is why it's important to do yourself a little T account so you can see exactly what kind of balance. With closing revenues, we know, what we need to do at closing expenses. We know they have a debit balance, so we know we have to credit them, etc. But in this situation, with income summary, it depends. If we had net income, we're going to have a credit balance in income summary. If we have a net loss, we're going to have a debit balance in income summary. What am I doing here? Okay. All right. So we know that we need to debit income summary for the $1,100. Okay. And that will end up causing income summary to be 0. What am I crediting? This says that we need to close income summary to the capital account. So I'm going to put the 1,100 now into capital. Notice that I did not close capital. I didn't say, oh, capital and income summary, so I'll just debit capital for $5,000 and credit income summary. Then you would have closed out at least the beginning capital. Okay, you never want to do that. Okay, we're closing income summary. Always worry about the stuff that you're closing first. Okay, we have one last one to go, which is to close drawing to capital. The drawing has a $100 debit balance, so to close it, I'm going to credit drawing for $100.